Time then to welcome on board Shreevar Kheruka, who's the MD at Borosil, to talk a little bit more about the earnings gone by. Thanks so much for joining in. Your revenues and EBITDA have expanded in Q2, and your net profit has been largely flat on a year-on-year basis. Help us understand what has really led to this pressure on your bottom line, since all the three segments have managed to see growth.
So the growth and the operating performance has been very good. The net profit's a bit flattish because of some changes in tax laws, which are not really material in nature in the sense that they're applicable for all, group companies, all companies across India. So therefore, I would say that we should focus on the operational performance of the organization, and that has been very positive with a almost 20% growth in our top line and equivalent growth in the EBITDA margin. We are very bullish for the future for our consumer products business, and we have been adding to our product portfolio. The whole trend of moving from plastic to glass is continuing. The trend for healthy lifestyles is continuing. Entertaining at home. So we're quite bullish for the future for our core product categories.
What's the festive demand been like? What about the stocking? What about the inventory levels?
So, the demand has definitely not been as strong as what we had anticipated or what we had seen in the last few years. And I would say that there has been also change in channel mix in the sense that we're seeing quick commerce pick up in a bigger way, and we're seeing E-Comm also doing quite well. But trade has been impacted to some extent. So overall, I would still be quite bullish on the festival demand, and even as we go into the marriage season, because that's also a big say a couple of months for us. But I think underlying inflation has eaten somewhere into the consumers' pockets. So we hope that next year will be better than this year on that front as well.
You earlier announced a capex of about 100 crore rupees, right? What's the capex status right now? How much of it has already been deployed? And, are you really looking at going all out building capacity?
Well, yeah, capex is actually all done almost. In fact, out of the 100, I think just maybe 20-25% is yet to be done. So we're almost through. We've built a lot of capacity in the last 2-3 years, and we expect to fully utilize that in the next 12 to 18 months, post which we'll have to start a new capex program. But at the moment, the focus has been to get operational efficiencies and then also get the let's say the capacity utilization up to closer to 80-90%. We're not there yet, but we should be soon.
Okay. When you say things are looking up for the core categories, could you define your core categories for us, and at what rate do you think they will grow?
Yeah, so actually, our glass is definitely our core focus. So, we've been selling a lot of glass lunch boxes, and I hope people are switching from plastic and steel, as I mentioned, to glass, and that's something that we have focused as one of our core categories. We have three broader categories: glassware, we have opalware, where we've been growing. This is mainly dinner sets, servingware, breakfast, what you eat out of in the morning even, or lunch or dinner. And that's been growing, at a CAGR of 27-28% for the last 7-8 years, in fact. And then the third category is what we call non-glassware, which is a little bit generic, but it's basically domestic appliances and insulated flasks. So all these categories, these are the four, let's say, main categories that we have at the moment. And what we've seen is a much better growth this year in glassware as people move away from plastic and steel.
You also moved into what really could be called as the appliance business, and the idea really was to create the advantage of the brand which you have. Now that space is getting highly competitive. The big players are moving from omni-channel to online. A lot of new companies are using their brand recall like a Havells and Eveready. Where are you fitting in that big consumer durable space?
So we are actually in the small domestic appliances, as I would say. That's the main focus area for us. We are in things like toasters, waffle makers, air fryers, that kind of stuff. We are not doing things like washing machines and large refrigerators, etc. So it is a very competitive space, no doubt. But we have a strong distribution channel across India, as well as a very strong service network. So we believe we are quite competitive with our product quality being right up there in the top, I would say the top tier, the premium segment. I believe that that's the reason why consumers come back to us and buy products from us, because they're confident of the product quality as well as after sales service. The brand is something that speaks for itself, and that's why we believe we have a right to win here. Obviously, like you said, it's a competitive space, but there's space for players like us in that space, and we focus mainly on the mass premium segment. We don't go after the very, very price sensitive segment there.
Which of your product categories then will be your largest contributor going forward?
Well, at the moment, I would say the non-glassware is the largest category. But going forward, I think glassware will take a larger share because we put up our own capacity. We spoke earlier about capex, so we've done a lot of capex, about say 150 crores in glassware. We've done about 200 crores in opalware in the last year and a half or two. So those categories have substantial production capabilities that we've enhanced, and so those categories will combined would contribute, I would say, in the next year or two, roughly 70 to 75% of our sales, and glassware would be the fastest growing just because of the enhancement of let's say product portfolio and capacity there.
Okay, Shreevar, good to have you on the show. And yeah, those glassware products are really good. All of us have been consumers as well. Good to speak with you as always.
Thank you.
Hona
If you like this video, then like, share and subscribe to ET Now.